CFO of Titan now to talk about consumer demand, gold demand, Ganpati, pre-Dussehra sales, if any at all. How are things looking there? Good morning. Thank you for joining us. Now, you've managed a revenue growth of 20% in Q1 FY20, but that's history now. You managed that in your watches segment. However, recently you have also trimmed your guidance to 12%. Why have you changed your guidance?
No, it's not that it's changed much. It's just that one is, of course, the overall sentiment. But importantly, I think the first quarter, the top line growth in watches was significantly higher because of various factors. One was, of course, that TCS order, which was exceptional. Okay. And the second was that we also advanced our activation promotion to June, which typically starts in July. And that happened because the department stores, because of poor sales, they all advanced their promotions to June. And I think we talked about this during the investor call as well, that if we were to take out all of this, the exceptions, which is the TCS one and is advanced, etc., we would have possibly ended at around 13% growth. So that is the actual growth. So the 20% is an aberration for the first quarter. So if we are saying we'll do 12-13% for the year, that's reflecting of the actual demand as we see it.
Well, in your Q1 FY20 commentary, you were also positive about achieving a 20% growth in H2 FY20, second half of this year. Are you still likely to maintain that?
It's a little too early to talk about revision. The way we are targeting internally is that we are going for a 20% growth in the second half in jewelry. This is essentially based on a few things. One is the number of stores which get opened in the second half will be much higher. There's been some delay in the first half, so you will get some additional revenue from that. The second is, of course, the fact that we believe a lot of the jewelry purchases in the first half is getting postponed essentially because of the high gold price. And therefore, it is likely that people will come up when the weddings happen and so on and so forth, which is largely in the third and the fourth quarter. And of course, the festival season and so on. So it looks, we believe it would be a shift in the purchasing pattern because of high gold prices, and people will possibly come back in quarter 3 because then they can't wait anymore. The event is happening. So this is one reason why we believe it is possible. But as I said, yes, we still have to, this is our internal target. So we can't obviously say that we will achieve this for sure. But clearly it's something that we are gunning for.
Right. Well, talking about gold prices touching that 40,000 mark, and you mentioned consumer sentiment being hurt. What has been the impact on Titan's jewelry business, and what kind of growth are you expecting in Q2?
I can't give you growth numbers for Q2. We are still during that quarter, and obviously we don't talk about it right now until possibly at the end of the quarter when we give you a note to the stock exchange as to how the quarter went. We did mention earlier that July was bad, as bad as the second half of June. But there has been revival in August for sure. So we've seen some growth for sure. So it's a little encouraging. Of course, we also had our diamond promotion going on now. But importantly, there's been some growth which has come back. So at least it's not negative for sure. It's a growth. It's a decent growth. We are hoping September may also be reasonably decent. But the big expectation is that quarter 3 could be as well as we had planned earlier.
And what hope do you have for the jewelry segment this festive season? How will it compare to last year?
Yeah, I think I just said that we're starting to see revival in August for sure, and hopefully it will continue going forward. Typically, when prices of gold go up so sharply, it takes at least 2 to 3 months for people to get adjusted to the new price levels, and therefore one is hoping that the next quarter will be better. This quarter, obviously, first half we are not going to be anywhere near the 20% growth that we talked about. Okay, it's clearly a miss because of a month and a half of really bad poor sales growth. But other than that, it's not so bad, and one is hoping that things will start getting better now.
Right. Recent trades have been showing that customers have been down trading. What is your ticketing price? Have you also witnessed such kind of trends?
I have not seen, I don't think we have seen any pattern here in our businesses on down trading. We've not seen patterns because if you look at each of the brands that we have, and watches is a good case in point here, I don't think we have seen any significant slowdown in Titan as a brand because that's the more premium brand. It's still doing well. So I don't think we've seen that impact of down trading in our business as yet.
Right. So with the slowdown, are you planning to tone down your investments, your advertising, expansion spends for the coming quarters at all?
No, not at all. Not at all. If anything, we would be looking at increasing focusing more on our network rollouts. We have planned close to 70 stores this year. We are running a little behind schedule on that a little, but hopefully by the second half we expect to catch up. So there is zero intent to slow down on network rollout. I think it's a great opportunity when we have a balance sheet which is far stronger than anyone else in the competition, and this is the time to actually roll out and increase the disparity in the network between us and the rest of the competition.
Okay, thank you so much for taking the time out and speaking with us today. Good to have you in the studios for a candid chat on what really, does that lowering of guidance actually mean. That's the word coming in.